Hey guys, good afternoon, everybody. Today's Monday, January 16th. It is 2:03 right now. Our scheduled mentoring sessions for 2 o'clock. So I'm a few minutes behind. Just got to update a couple things here. And once everything is all updated, we can get started with this mentoring session for this week. So just give me a few moments to finish updating everything here, and then we should be good to go. All right, just a couple more things here. All right, cool. Let me get this link sent out to you guys here in the premium. All right, cool. I'll give it a few moments for people to make their way in. Link's been sent out. Sent out as well. Get this posted up on our pages real quick. All right, solid. So it looks like people are still making their way in. So happy Monday, guys. Today's Monday, January 16th. Today's a holiday, so we didn't have our live trading session today, but we are having our mentoring session. So if you guys have any questions, feel free to put your questions in the chat. Otherwise, we'll just keep waiting for people to, to make their way in. All right, I'm just going to post this on the social media real quick, and then we should be good to go whenever you guys are ready. So if you guys have questions, go ahead and put them in the chat. Otherwise, we'll just be reviewing, the main strategies that we've been applying. Like one thing I wanted to mention, guys, too, is that I don't know if we'll be taking the breakout 2.0s as like official trades, because there's such a big discrepancy with regard to, the breakout versus our scalps. I think the scalps would be like the main ones that we focus on. I'll be calling the breakout 2.0s, but I don't think I'll be calling them as like official trades, because it throws people off sometimes, especially when they have to, adjust their stop loss and whatnot. So you guys are welcome to take it. I'll probably be taking it too, but the way that I'll be applying it is I'll probably be taking it for either partial moves, or I will be taking it once it's already moving. So I don't plan on taking and then holding on to it, throughout the whole session, because lately the market's been taking too long for it to actually hit. So the problem with that is that it eats up into my margin. And then if that's the case, I'm not going to be able to take, the other scalps that come up. Like sometimes we'll get a momentum scalp failure, but I'll be too focused on the breakout where I miss it. And then sometimes we'll get like a momentum scalp variation, and then right after that, a momentum scalp. So like if you guys have noticed from the previous live sessions, I've been taking just like one of the trades because I've been missing like the first or second trade that comes up. So I think main focus will be on the scalp strategies, but I will be still identifying the breakout 2.0. But I'll let you know if it is considered an official trade or not, because the main thing here is to make sure that everyone's on the same page. So, all right, guys, it is 2:07 right now. Looks like pretty much majority of people are here in the room so far. So if you guys have any questions, feel free to put them in the chat. Otherwise, move forward with this. So let's see. Oh, man, Aaron's here. Aaron, why are you on the YouTube, bro? You're not on the Zoom? Yeah, hop on the Zoom, Aaron. Let's see. Barty said, "Hey, bro, tons of questions I got. LOL. Can you name the prop firm that you are currently using?" I mean, I've always used FTMO. FTMO is always the only one that I recommend. I also use MFF on top of that, and I have one TFF account, but I don't recommend TFF at all. I'm going to keep using them until they stop paying out, but I don't plan on opening any of their accounts with them because their execution times are super off. So for me personally, I use FTMO. That's the only one that I can recommend. If you already maxed out your FTMO, then you can go with MFF. But I mean, they're still wishy-washy. TFF for sure is unreliable, so I don't recommend using TFF. But I mean, FTMO is the only one that I can recommend. So I'm not going to recommend I'm not going to recommend a random funding company just to get some affiliates with them. I prefer to just give you guys like the real info, and FTMO is like the only one that really stands out. Hey, Valentine, how's it going? Question from Nick. Nick's asking, even though you view YM1, do you still take trades on US30 on MT4? Yes, because there's no way to take YM on MT4, Nick. Unless your broker carries it, then there's no way to take it on there. It's the same thing though. So you'd have to use US30, because I think that's the only main one that is that's available on the specific. Well, I mean, depends on what broker you're using, but for the most part, US30 is like the only one that you can use, unless you're using a futures broker, which is probably unlikely, because then you wouldn't be using MT4. Other than that, let's see, question from Barty. He's asking, what is your account size, brother? My account size is 200K. So I only use 200K. I mean, there's no point in me using a smaller account. It just wouldn't make sense, because I'm taking the same lot sizes across all the accounts. So all my accounts are 200K. I did merge them to 400K at some point last year or the year before that. And it just messes with my trade psychology, because I'm not used to seeing the bigger numbers. I'm used to seeing about like 1,000 profit to like 2,500 profit. But when you're on a 400K account, you have to double lot size. So typically you're going to see double that. So for me personally, I'm only using the 200Ks across all the accounts, and then I copy my trades across them, and that's how I get them to be pretty much aligned with regard to my profit and risk. So I just have 200K accounts I have 2 of them on FTMO, I have 3 of them on MFF, and then I have 1 on TFF. Those are the account sizes that I have. And I've been using FTMO for, I don't know, like 2 years now, 2 or 3 years. So I've been with FTMO for a long time. They've been around for way longer though. So I've only started using them, I think 2 years ago. So I've been consistent with them for 2 years. MFF probably about a year, and then TFF like less than a year. Because when TFF first started, I opened an account and I did everything with you guys live, and I passed that challenge and got funded within less than a week, because they don't have a trading day minimum. What happened was TFF, as soon as I got funded, they moved me to another server, and that server was garbage. Like, you can't scalp on that server. So I ended up losing that account because I violated the parameters, and I didn't use them again for a while. I hopped back on a TFF like maybe a couple months ago, and they pay out, so they're okay, but the profit is not the same. I mean, if you've seen my profits, they're like less than half, if not worse. So they're not necessarily good long term. If you look at my profits here, I think I have my profits here. So you'll see my accounts here. So this is my TFF right here. Or where is it at? This is my TFF right here, right? I made 100 off this last trade. This was on, I think, Friday. I made 100 on this trade, right? All of my other accounts made me 700, 710, 700, 960, and then my FTMO over here, 1010, right? So that's a big difference. Like, it's just not really worth it. I mean, I already got refunded on this account, so whatever happens with the account is fine. And I made payouts on it, so I'm going to keep using it until I lose it. But I think eventually it's just going to not work, because if this keeps happening and I get either less profit or a loss, then it's going to really screw with my account long term. Because you can see here, all my profits here are like above 1,000, right? Each trade, I'm aiming for about 1,000, 1,500 profit per trade. My TFF here is like way off. So yeah, it's not really recommended, but I mean, if you guys want to do it, like, what does my opinion matter, right? I could tell you guys, to warn you guys as much as possible to not use any of these other funding companies, but everybody's looking for a discount. They think just because the funding company is cheaper, it's going to be better, but realistically, the experience isn't the same. So all I can recommend is FTMO. Yeah, no problem, Nick. It's the same thing. Like YM and US30 move at the same direction. I mean, it's just the pricing is going to be off, so you can't be entering off the same price. But the movement is the same. YM is going to be more accurate versus US30 because US30 is broker data. This data is directly from the exchange. So you have to pay for this data from CBOT, you know, the Chicago Mercantile Exchange. If you look at US30, these are all based off the specific broker. So pricing is going to be different, but movement's the same. Unless you're using like a futures broker, which typically doesn't apply on MT4. Yeah, Valentine said all good, bro. Bit of a slow market today. Yeah, today's a holiday, Valentine. So I'm not sure if you're aware, but today is MLK Day. I didn't trade at all today because I've lost funded accounts due to trading on this holiday. Like 2 years ago or a year ago, if you guys remember, I was trading, I think live, and I took a trade and I didn't close it when the market closed because you can see here that the market closed around 9:59. So what happened was like a couple of years ago, you're not supposed to trade over the weekend with FTMO unless you have a swing account, which I don't have at a regular account. I took the trade here and then it pretty much violated because when you hold a trade and the market's closed for more than 2 hours, it's considered a weekend. So if you guys traded today, hopefully you guys closed out of your position because if you didn't, you probably would have violated your the account. And they pretty much took my account away and I had to start a new one. A question from Alex. Alex is asking, what do you think about MFF? MFF's all right. But again, like I mentioned, you know, if you're only looking to use MFF because it's cheaper, then good luck because it's not going to be the same experience. The customer service isn't exactly on point. They take like a long time to respond. They do have issues with the profits too. Sometimes their execution times are a little off. So I mean, I could only recommend MFF if like you've already maxed out your FTMO. If you didn't max out your FTMO, then there's no point in going to any other company. Like what you're going to say, like $100 to go to like MFF to have worse service. And it's a common thing. So it's not just you, Alex, but like everybody, like you like if you saw my inbox, you'd see how many people ask me to compare MFF against FTMO. I always recommend FTMO, but for whatever reason, these people still want to go and use MFF. And it doesn't make a difference. If you can't pass FTMO, you're not going to be able to pass MFF. Or if you can pass it, you probably got lucky on that. So, you know, I don't ever recommend anyone go funding company shopping. Like if you haven't maxed out your FTMO, then there's no reason for you to look anywhere else. Yeah, you'll save like maybe $100 on a challenge, but when it comes down to servers, execution times, spread, customer service, you know, getting a hold of them, you're not going to find the same type of experience in other companies versus FCMO. So, I mean, it's up to you guys, but I get this question like literally every day from someone that's shopping for a cheaper funding company because it's, you know, it's a couple $, like $100 cheaper or something, or depends on your account size. On the 200K account, I think for MFF, it's like 900. And then for FTMO, it's like 1,200. So, you know, weighing the pros and cons, I wouldn't really recommend anything aside from FTMO. Let's see, Barty's asking, can we have multiple accounts on both prop firms? You can have a max allocation on FTMO of 400,000. So that's why I have 200K accounts because that's a max that I can get on FTMO. And then for MFF, you can have a max allocation of 600K. So that's why I have 3 accounts on MFF. Each broker is different, or each funding company is different. So you should probably refer back to them. A lot of people ask me funding company questions, like I'm the funding company, right? I'm not the funding company, guys. Like Melvin yesterday, this dude asked me like a million questions about MFF. And I'm like, it'd be so much easier if you just go to their actual website and ask them directly. You probably won't get a response right away, but you guys got to remember, I'm not the funding company. So if you have any specific questions regarding the funding company, their requirements, like whatever they have in place with their restrictions, you should ask them directly, not me, because they're changing rules like all the time. That's like one thing that happened with TFF and MFF, because they do change their rules from time to time, and they change their servers often too. So like, I think TFF just changed their servers recently because they added CTrader. And if you guys have seen, my profits have been like way different, like for the past couple of weeks. So if you guys have seen here, yeah, like this is my TFF count from I think Wednesday of last week, right? I made negative 500 on this account, but I made like 200 on this one, 200 on this one, 150 on this one. It was like so off because they're on new servers now. So I mean, they're constantly changing their servers, and that's usually going to be the blame whenever issues arise. Let's see. Nick said going to be starting a new FTMO account soon. We'll be back in the premium group. Yeah, definitely, Nick. We'll be here whenever you're ready to return. Another question from Barty. Barty's asking, what does the green and red line mean on the chart? Which one are you referring to, Barty? There's a lot of green and red lines on the chart. Are you talking about these vertical lines, or the ones down here, or the ones down here? Yeah, if you be a little more specific, I can let you know, but I'm not sure which one you're referring to. If it's the ones up here or the ones below. Maria's asking how I'd like to know about the strategy used in Forex. The strategy for Forex, Maria, is pretty much the same thing we're doing for US 30, it's just on the higher time frames. So like, for example, for applying the momentum scalp, it's just the intraday strategy. So we're using the higher time frames here to identify direction of price, just like we do during the live sessions. And then I'm entering on candle close. Another strategy that I've been kind of looking at to apply as well would be the snipe strategy. So that's another one that I'm applying sometimes. I haven't called any signals off it, but it's one of the things that I'm looking at. So like the main strategy, like for example, I'll look at what's the most recent Forex trade that I called last week? I think it was odd USD, right? Yeah, I called this odd USD trade on January 11th. So January 11th, I called this trade right here for a buy. This was on January 11th at, I'll just see if I can find it here. January 11th. Which was, I'm pretty sure it was this entry right here. So let me just go back and replay it to that time. I'll just show you a quick breakdown of like how I apply it. It's literally the same way that I'm applying the analysis for US 30. It's just on higher time frames for Forex. But so before I go deeper into this, Maria, I don't know if this is something that you should really focus on, because the last time we talked about, your problem is over trading. So if you're trying to go into Forex trades, odds are you're going to overtrade even more than you already are. So if you're already overtrading with US 30, you probably should not delve into Forex unless like you really want to trade Forex. Because the thing is, if you're just bored and you're looking for trades to take because you really want to enter a trade, that's not a good sign, right? Because you're just going to lose more if you take bad trades here on Forex. So I'll show you the strategy, but I want you to actually, think about it before you actually start trading Forex, because more trades doesn't necessarily mean a good thing. It can mean a bad thing. Because if overtrading is your problem, then adding on other things to trade is just going to cause you to overtrade even more. So just want to show, and I just want to, give you a heads up, because I already know like what your issue is with trading mostly. So I'm looking out for you and I don't want you to over leverage your account or, take more risk than you need to. But anyways, so the entry here, first thing I do is I look for alignment with overall trend. So looking over here on the 1 hour, you can see price is bullish because price is above the pivots, trend meter is green, and the pivots are angling up, right? Looking over here to the 4 hour, same exact thing, same time, price is above the pivots, pivots are angling up, and the trend meter is green. Lastly, here on the 8 hour, same exact thing, price above the pivots are angling up, and the trend meter is green. So once you've confirmed the overall trend here, you can assume that the trend here is going to be bullish and it'll continue to be bullish. Once you have this setup marked up right here, you're just looking for a momentum signal to identify the catalyst for entry. So right here is bullish, right here is bullish. Right here we have another buy signal. All momentum here is bullish as well. So if you have bullish momentum and bullish trend across the board, odds of it continuing to the upside are, very likely. Price might come down a little bit for retracement, and that's typically normal. It happens all the time where price will shoot up, retrace, and then continue up in the direction of your trade. So that's kind of like the setup that we're identifying here. We have the overall bias, overall direction of momentum and trend. Right here, you take the entry for a buy. Long position right there. CP would be, or stop loss would be down here. 38.3, we'll just round that up to 39. And that's pretty much it. Once you have that setup right there, and I mainly use this for just major pairs, so like odd USD, anything paired with the USD is basically what I trade this on. Today's not a good day to trade because it's a holiday. Just keep that in mind. Volatility is not there. So I probably wouldn't be looking for trades until tomorrow. But this is the entry that I called right here on January 11th. Same markup right there. What we did is we took it late actually. So trade was already running. I didn't see it until like a couple hours later because this was the swap spread. And as soon as I saw the entry there, that's where I made my entry a little lower. But either way, I mean, if you were to take this trade here, let the trade run and full TP. So that's the strategy right there, Maria. If you have any other questions regarding this, or if you want to see another example, feel free to let me know. But basically that's the setup that I take. I typically don't look for entries on Sunday, and I don't look for entries on Thursday night because Sunday is too early. Market isn't fully open yet. And then Friday, generally I don't trade close to market close. See, question from Eric. Eric's asking, any red flags when trading Forex? So the main red flag that I would look for here is news, right? So if you guys remember this entry here, I actually didn't hold this entry to the full move. What I did was when price was in profit, I moved my stop loss in profit because I knew there was high impact news coming up. Right here and right here. So even though this trade did hit full TP, I know some people did hold it to the full move. For me personally, I moved my stop loss in profit and then I got out like with some slight profit. I made like 50 bucks on this trade. I was anticipated to make about 500 off this trade because I'm risking about 3 to 5% per Forex trade since I only take a few entries a week. This here was anticipated making about 500 to 550 profit. I only made about like 50 or 60 on it because I moved my stop loss in profit when price was like somewhere around here. And I gave that warning in the chat. I mentioned, if you guys want to hold on to it, feel free. If not, I was taking too big of a risk. I was taking a 5% risk. So I was like, okay, I'm gonna move my stop loss in profit. And I got pulled out because there was news coming up right here, which was the inflation news. We had, I think CPI news on that day. So the main red flag that you'd be looking for, Eric, would be news price. So if you have news turned on within your trading view, you'll see like these little news markers right here. So that's the main red flag for Forex pairs. The other red flag that should be kind of taken into consideration would be a ranging market. So that kind of contradicts my entry here because I still took it. Honestly, with this entry here, I didn't really want to take it, but I just felt like it was going to hit because everything here was so bullish. Like if you're looking at the other time frames, not just odd USD, but like all the other pairs here were also very bullish. So when I saw this here, I was like, okay, this is for sure going to hit because everything is very bullish. And then I also use, the technicals over here to identify, where I think price is going to go. It was like strong buys across the board, and that's why I took the trade. So there's a couple other confluences that I use that aren't really necessary, but I do like to use them just to increase my confidence in the trade. But I think the main red flags would be news, whether it be high impact or medium impact. News is the main thing. And then other than that, when price is ranging. But nothing aside from that. Yeah, you don't want to have too many requirements because then you'll just miss a lot of trades, especially for these Forex pairs because they don't happen to come up, very often. So when I see a good one, I'll take it. If not, then I typically just hold off and I'll wait for the next good one to come. I make majority of my profits from US 30 anyways. So this is just like a small portion of my profits. All right, so other than that, let me get back to the chat over here. So yeah, Barty, he said, so Barty earlier asked, what are the green and red lines? They're both vertical, Barty. So this is vertical and this is vertical down here. So if you could be a little more specific, because they're both vertical. So that's why I was asking, are you talking about the ones above or the ones below? Because these are vertical and these are also vertical. So yeah, I just got to be a little more specific, because they're, or I could just tell you what both of them are. These are momentum signals and this is volume. That's going to show you, like, this is going to show where momentum is going. This is going to show you if volume is above or below average. But yeah, they're both vertical, so I'm not sure which one are you talking about. Next question from Jew. Jew's asking, what's the difference in FTMO server 1 and server 2? They gave me different server for verification step. They're the same. They're the same thing, Jew. It's just they can only have so many people on one server, so they have two different servers for people to be added on. So it doesn't really make a difference. Once you get to just the regular server, where it's not like server 1 or server 2, that's like when you're on your funded account. So I think the market conditions do change a little bit on the funded account, but not like an extreme amount where it makes a huge difference. But the servers that they use for like server 1 and server 2 they're not really different at all. It's just when server 1's full and there's too many people on that one, they add you to server 2. But sometimes, like if you go from challenge to verification, a lot of times if there's not a lot of people on server 1, they'll just keep you on server 1. So it doesn't make a difference for the most part. You'll see a difference though when you get to the funded account. Once you get to the funded account, you'll see that you'll probably run into a lot more slippage. And you guys will see that through my profit sometimes. Like, I think from last week. So these are both FTMO, these two top ones. The slippage here wasn't like a crazy amount, but it's off by like a couple $100. So this one here, I made 200 on the first trade. This one I made 150. On the second trade, I made 1,370. And then this one I made 1,120. So, I mean, there's going to be slippage here and there, but it's not going to be like horrible. Like you might be off by like maybe $100 or a couple $100, but it's not going to be like TFF where you're off by like $1,000. Yeah, exactly. It could be good or bad slippage. So it's not necessarily going to be a bad thing all the time. Typically all of my trades here, I was supposed to make 1,000 per trade, but you can see how the slippage here, these are both FTMO. This one made 1,190. So slippage in my favor because price kind of spiked up very heavily. And then on my FTMO number 2 here, you can see the slippage is way off. I was supposed to make 1,000 on this trade. I made 1,690. So sometimes slippage is good, sometimes it's bad. But for the most part, I usually see it whenever it's bad, it's not really that horrible. It's only off by like a couple $100. But when it's good, it's usually, you know, it's kind of spread out, maybe like $300 or $400. Like this one here is a clear example. I mean, once 1,690 on this one, and then 1,190. And you can see the green strip here and a timestamp. So my timestamp here was 17:20:02. And this was off by like just a split second, 17:20:03. So execution times are fine. The only difference here was, and the entry point was exactly the same, 34,160.60, 34,160. Actually, okay, the entry time was was off by maybe like 10 pips. So not a huge difference, but you know, you can see that there's a difference there. Barty said not the volume. Yeah, so it would be easier, Barty, if you just said the ones above, right? So like in the future, just like if I'm asking, you know, if you're talking about the vertical lines above or vertical lines above or below, you know, you can see above or below. The ones above are momentum signals. So when you get a momentum signal right here for a sell, if this is a red momentum signal, this indicates that momentum is swinging downwards, right? You have a green buy signal right here. This is going to indicate that momentum is swinging upwards. So those are what these are here. These are momentum signals. So like, for example, if you have an upwards trend here and you get a sell signal, this is just going to confirm retracement. It's not necessarily going to confirm that price is reversing. It's just retracement. So these vertical lines above are going to indicate swings in momentum. So you get a buy signal, swing to the upside, sell signal, swing to the bottom side, and then etc. You know, swing up, swing down, swing up, etc. That's basically what these upper vertical lines indicate. The ones on the bottom are volume, but since you're not referring to that, the ones above are going to indicate that these are momentum swings. This is using my momentum indicator. All right, let's see. Let me go back to Eric real quick. So Eric had another question here. Eric's asking, when we were trading Forex on the 4-hour time frame, TP was at the closest liquidity zone, right? Or was it at the previous swing? Yeah, no problem, Barty. Yeah, sorry for the confusion. It's just there's a lot of different vertical lines here, but we cleared that up, so it should be good. Quick back to Eric's question. So he's asking about like where we place stop loss, typically on the 4-hour time frame. So it was a little different for the 4-hour because the swings would be a little too far off. So if you guys remember when we were applying the strategy here on the 4-hour, it was slightly different because I was applying a different strategy, Eric. So on the 4-hour time frame, you can apply the same exact strategy, but you'll see that the range here is just way too far off. My typical cap is going to be about 50 pips. So like, for example, if you're looking for a buy right here on the 4-hour, I mean, technically you could put your stop loss right there at the swing, but that's going to be at 100 pips already, right? So it's like a little far off. The strategy that I was applying before on the 4-hour time frame was the same strategy, but the TP was a little different. So like, for example, right here, if I was to take this right here, and I don't know if this was an entry or not, but for example, if this was an entry right here, my stop loss would be based off my TP. So my TP would be right here at the next high low. And I think this is kind of where your question kind of ties in, because you're asking, if the TP was to the closest liquidity zone, and that's exactly where it'd be considered right there, wherever the high low would be. And then my stop loss would be like the equal distance away. So this is different from the current strategy that I'm applying because I'm on the 1-hour now, so it's a little different. But yeah, if you're referring back to like the 4-hour strategy that we were applying in the past, this is basically how it would be applied. Another example for this would be down here. This is probably a better example because there's more space. But yeah, if you saw this was a bullish momentum signal, your TP would be right there for about 20 pips. And then stop loss same distance away. So it's pretty much the same thing. But so this is the reason why I stopped using this too, because the volatility here is just, well, I mean, this candle here is too big, so you probably wouldn't have taken this entry. And the problem with this is that you would like never get entries, right? So when I used to call these trades, the market was like a lot slower. So this was like December 29th, closer to Christmas, but the volatility over here was like using this, for example, volatility here was not as big as how it was prior. Because if you go back to that candle that I was just looking at, let me just look at that one. This candle here is huge. If you were to take a buy there, like if you were to go at least to the candle length, it'd be 45 pips, right? Which you could do, but that's just not the way that I was applying it previously. Like if you did that for the candle length, yeah, it'd work out. You still hit your TP right there. But it's just a different type of move. And the thing with these 4-hour candles is that you barely get any entries. Like even though they were good entries, you'd be waiting forever. And sometimes you just never get an entry. So yeah, if you're applying the old 4-hour strategy that I was kind of applying, it's basically the same strategy. You're looking for overall direction. So let me just go over here real quick and see if I can find one. Overall direction. And I think for this, we use the 4-hour. 8-hour and then daily, right? So it's a little different, it's a bigger move. And it would take longer for you to find like areas where price would align, right? So like, for example, if you're looking for an entry here for AUDUSD, you would have to take one, and let me just go and see if I can find one here. Yeah, because these don't come up as often. This is bullish, bullish, bullish. Yeah, so basically the other example that I showed you, this would be an entry. But this would be like so far off from the previous one. Like you take this right here on the 6th, and you wouldn't have another entry from like 29th. So you basically go like a whole week without any trades. But yeah, basically when you're applying this on the 4-hour, you're looking for the same thing. You're looking for alignment of overall trend, bullish, bullish, bullish. You have this right here. Obviously, I wouldn't take this trade here because the candle was too big. But if you were to take it, your TP would be set at the most recent high low. Not necessarily liquidity, because liquidity is a little different. So like if you were to identify a liquidity zone, I mean, this would kind of be considered a liquidity zone because typically what we do is we draw, untested high lows right there. So yeah, this would be a liquidity zone. So you could actually go for a little higher. You can enter a long position right there, and your target price point would either be somewhere between here, right? Like about 20 pips or so. 20 pips or even more, 22 maybe. Which, yeah, eventually would hit, but I would still consider this a little too risky. So yeah, if you guys want to apply this on the 4-hour, like how I used to do before, that's basically how I would look at it. But this candle here is just way too big. Sure, no problem, Eric. All right. Let's see. Question from Fern. Fern's asking, do you have to notify them before using the copier? I've never notified them, Fern, and they've been paying me out, so I don't think it's necessary. I mean, yeah, if you wanted to, you could, but they'll probably just tell you the same thing they tell everybody, right? That they'll tell you you can use a copier as long as it's yours. So the thing is, if I was ever to run into trouble and they say that I'm, using a copier or I'm like on some mass account, I would just show them my other accounts. And I'll say, okay, these are it's copying from my FTMO, and it'll copy to these other accounts. But a lot of companies don't allow for copiers. That's why it's hard for me to like branch out to other companies, because they don't allow it. So FTMO allows it as long as it's your account. MFF allows it as long as it's your account, and then TFF allows it as well, but only if it's your account. So you can't be copying from me, for example, and I wouldn't let anybody copy from me, because then it's just going to screw up my relationship with, FTMO. So yeah, I don't think you have to notify them, but I mean, if you're really paranoid about that, then yeah, it makes sense to notify them if necessary. But I've been using them for like over a year now, and I haven't had any issues. I also only trade from home though. So if you're trading from like a public, IP address, it may raise some red flags. Like if you're trading from a coffee shop or you're trading from anywhere outside, then yeah, it might raise some red flags, because other people might be on that same network, because they base it off like your location. That's how they identify if you're like copying from another person's account. Let's see. All right. Next question from Dre. So Dre's asking, can you talk more about market structure and liquidity? Yeah, I mean, it just depends. Like what type of question do you have about market structure and liquidity, Dre? Because I mean, it's such an open-ended topic. I mean, if there's something specific that you're looking for, like are you identifying? I mean, you have to be identifying something specific, right? Like what type of market structure you're looking for. Because if you want to go from the bare basics, like market structure right here would be considered bullish, right? Because price is going to the upside. If price is going sideways, then that would be a ranging market, right? So, I mean, if you have a specific question about market structure, I can kind of break it down for you. But I mean, talking about market structure, it's just such an open-ended topic. Let me see if I could just show you a better example here. I mean, like if you're looking at the very bare basics of market structure, I mean, there's only three different types of market structure that you should be looking for, right? My indicators here help identify that, but there's only really like three different types of market structure. Like you can identify market structure as bullish. That's going to be one. Right? That's one type of market structure when price is bullish. Another type of market structure is when price is ranging. And then another type of market structure is when price is bearish, right? So that's, I mean, if you're looking at just basic market structure, those are the three types of market structure that you'd be looking for. Bullish, ranging, consolidation, and bearish, right? That's the main things. If you want to go deeper into like specific types of things that happen after market structure, typically what you'll see, and you'll see it happen a lot, is you'll see a bullish move or a bearish move, and then you'll get a sideways movement. Once price breaks out of the sideways movement, it typically breaks out into a big movement, right? I mean, there's different names for this. Like, some people call it exhaustion. Like price will go up and they'll say, okay, price is exhausted, so it's going sideways. But it means the same thing. Price just consolidates, right? That's basically how the market moves. If you look back to like any asset, it doesn't have to be US 30. It can be any asset really. the formation of market structure is usually, a bullish push, retracement, continuation. That's like one form of market structure. When it's done pushing, it will generally go into a range, right? And then you have the same thing again, bullish push breakout, range, bullish push breakout, back into a range. So, I mean, if there's a specific question that you have or something that you don't understand about market structure, I can help you with that, Dre, but I need like a more specific question, because if you're just looking at bare basic market structure, there's just like a couple of things that you really have to know. It's like identifying a trend, identifying consolidation in a range, and then it goes back into the trend. That's typically how the market moves. To your other question about liquidity, liquidity is identified differently. So like the way that I personally identify liquidity is I look for areas where people have their stop losses placed, right? So for example, here I use the high-low indicator. That's like one of the main indicators I use to identify liquidity. So looking at this right here, whenever I'm looking for liquidity, I'm looking for areas where highs have not been tested, right? So like, for example, all of these areas right here, right? You can see that price was in a downwards trend right here. So you can see basically price is just going downwards, right? Price basically came down, retraced up, went sideways for a little bit, and then continued down, right? So putting yourself in the other person's shoes, right? So say, for example, someone here is chasing this drop, right? And this happens all the time. You'll see price drop like this. And then typically what happens is someone will enter a trade at some point, right? So say, for example, someone enters a sell down here, right? If you learn trading from anybody else, people always, or generally, even on myself, we place our stop losses at the previous swing, right? So this is a swing low, swing high, swing low. At this point, you enter a sell, your stop loss can be placed right here, right? So this is where I'm identifying liquidity sitting. Again, right here, someone else wants to enter another short position, because this is typically where people enter trades, right? So like, for example, say their stop loss is 60. Generally, what do people like to do? They go for like a 2-to-1 or a 3-to-1, something crazy, right? Like, so 60 times 3, now it's 180 points, right? So I'm sure you've seen a lot of people enter trades like this, and this is generally how their trades look, right? They got a huge TP and then a small stop loss. So this is how I identify liquidity. So again, for example, here, someone enters a short position here, and where's their stop loss going to be? Right there, right? 95. So I'm basically just compiling stop losses. I'm looking for where everybody's placing their stop losses. And that's where I'm looking for liquidity, because what happens when people get stopped out? It's a stop loss hunt, right? Where people will end up getting their accounts blown, because when the stop loss hunt hits, it usually continues to push in that direction. So for example, here, price goes sideways, and it just creates new lower highs, right? Again, right here, say for example, someone wants to enter a short position. Their stop loss is going to be right there at the swing high, 85. So 85 times 3, 255. So what I'm basically doing is I'm doing the opposite. If everyone here is looking for a sell, I'm looking to do the opposite, because basically that's how the market makers make money, right? They try to stop everybody out. So if I was to zoom out of this here, you can see how like there's a bunch of entries here for whoever's trying to chase the sell here. And I already know where their stop losses are placed, right? So you can see a bunch of stop losses would basically be placed right here. So my liquidity is sitting around this area right here, right? So if I'm anticipating everybody here looking for a sell, what am I going to do here? I'm going to look for the opposite. If the bias here is bullish, then when price swings above here, like when price hits this area here, I'm expecting a bullish push to basically wipe everybody out, because I'm looking for all these stop losses here to get triggered. So like, for example, here price goes sideways, and then eventually once price finally makes its way back to the upside right here, which will happen eventually, everyone has to get stopped out at some point, right there. This is where the triggers happen, right? It's starting to trigger everybody's stop loss. You get people wiped out right here. And you see how this big candle happened right here? This is liquidity. So I already identified this area of liquidity right here. And you can see this big green candle. And you can see the shift in price, right? The move started down here. And then now it's pushing up and knocking everybody out. And you can see how it becomes super volatile around that area. So basically, whoever was entering sells at this point, all their stop losses got triggered. Price kind of bounced around a little bit, and then it continued to the upside. So that's how I identify liquidity. I mean, there's other ways to apply it. I mean, if you've learned trading from anybody else, I'm sure they have something similar, but the way that I trade, it's more concrete because I have the indicators here to identify where these actual liquidity zones are sitting. Anyone could like plot random high lows, right? So like say, for example, I go back to that same spot right there, right? Like people can identify certain high lows. Like they'll say, okay, this is probably a high. And then this is probably a high, right? But realistically, that's just guessing. So in order for me to take the guesswork out, that's why I created the high-low indicator. So yeah, this one probably would have been correctly identified, but then this high over here would have been missed. And this high right here would have been missed as well. So that's pretty much how I identify, liquidity in these types of movements. So, yeah, Dre, if you have any other questions regarding that, feel free to let me know. I mean, this works on all time frames. It's not just a 10-minute, like this is like one of the strategies that I used to use a lot on the 1 minute, actually. There's just a ton of ways to apply these strategies. Like there's no one way to apply all my strategies. There's a ton of different ways. There's a bunch of different variations and ways that people apply it. But I mean, it's pretty endless. You can probably see it a lot better here on the 1 minute though. Like say, for example, this morning, if you were trading US 30, right? It was a holiday, so obviously you weren't trading, but you'll see a lot more of this liquidity build up on the shorter time frames here. So again, right there, we identified liquidity. The only reason I'm looking for a buy here is because price was bullish this morning. I wasn't trading this morning, but I did see it was bullish. So if you're looking for liquidity there, those would be your areas to look out for. See right there, price pushing up. Hit liquidity right there. Hit liquidity again right here. Liquidity again right there, and etc. So this high-low indicator is like super versatile because you can use it for a lot of things. You can use it to identify liquidity. You can use it to identify, supply and demand. You can use it to identify support and resistance. It's just really useful depending on how you want to use it. You can also use it in conjunction with the SR indicator. So, I mean, if you guys remember the snipe strategy, that's one thing that I've been playing around with lately. You can see another snipe entry that happened right here. And you can use that as a confluence, right? So for example, you see a snipe entry here for a buy. Your TP could be, at the top of liquidity right there. This price continues to push up higher. That's where the liquidity was sitting. Right there. So there's a lot of different ways to apply these strategies, guys. There's not just one way. I know a lot of ways to apply these indicators and these strategies. And this is why it's useful to apply to even your own strategy. If you don't want to apply my strategies, these indicators will still help to improve whatever strategy that you guys are applying, because I've created these indicators to provide a solution to basically any type of trading style. So yeah, if you guys have any strategies that you're applying and you need help to improve it or ways to avoid losing certain trades, then, just let me know and I can pretty much point out things that can be done differently to improve. If trade psychology is your problem, then that's something that I can't really change for you guys. That's something that you guys would have to change yourself, because issues with trade psychology is like rooted in yourself. Like I could tell you every single step to do to not lose a trade, and the thing is, your trade psychology is still going to make you make that same exact mistake over and over again. So trade psychology is different, but if you have a strategy and there's something that you guys think that can be if there's something that you think may need to be added to fix it, I probably do have a solution for you, depending on like what type of entry you're taking. All right, question from Nick. Nick's asking, does FTMO still do repeats? Yes, they do. Oh, from what I know. I haven't done a challenge in like over a year, so I don't have any idea if they've changed things, but I'm pretty sure they still do, Nick, because I haven't seen any update from any changes. So Nick said, like, if I have a 100K challenge and at the end of the month with 108K, do I get a repeat? So I don't think you'll get a repeat, you'll get an extension. So instead of getting a repeat, they'll give you like another 15 to 30 days. And then from there, you can just keep trading it, and then hopefully you'll pass, because you'll just need 2,000 from that point, right? You're so close to your profit target. So I think your profit target on 100K would be 10K, right? So you have to be at 110,000 to pass the challenge. So what they typically would do is they give you an extension, not a repeat. So at the end of your 30 days or at the end of your challenge, you'll typically get an email from them. They'll either give you a repeat or they'll give you an extension. If you're too far from the goal, then they just give you a repeat. Yeah, extensions, I do think they still give extensions. So it'd make more sense, right? It wouldn't make sense for you to start back at 100K and then have to do it all over again just to complete it when you're only off by like, 2,000. Friend's asking what's a repeat. So for the repeat, basically with FTMO, say for example, you're doing a 100K count and then you end the challenge, but you're in profit. Like say you had like a shitty month, right? Like you just ended up going back and forth with wins and losses. And then you end the challenge with like $1 net profit. So say you have a 100K count and then you're at 100,000 and $1. If that's the case, then FTMO will send you an email like, hey, you didn't violate any of the requirements, so here's a free retry. And they just let you repeat the account. So they just reset your account back to 100K, and then you have another challenge to just keep going. And I think it's unlimited. Like you could just keep getting free repeats as long as you don't blow the account. So yeah, that's the good thing about FTMO. I don't know about MFF or TFF if they do that. I haven't done a challenge in like over a year. I have to do a new challenge though, because I have to change my email. So I'll probably be on that boat with you guys again. But yeah, for the most part, that's the repeat that's available for FTMO. I'm not sure if any other company does it anymore because it's been a while since I've done it, but I know FTMO does. They just let you keep repeating because they actually want you to pass. It's not like they're trying to make money off you failing. That's one way that they make money, but I think FTMO is like one of the few companies that actually want you to pass and be consistent. Like there was this tool that who showed me that tool? There's this thing called like a mentor thing with, and who said that to me? I think Sean. I forgot. There was someone in the group. Oh, Douglas. Yeah. So Douglas sent me this thing here that's pretty cool. Like I don't use it, but there's this cool thing called mentor application for FTMO where like you can set your like your goals for the day, like your daily profit goal, and then you can pretty much track your trades. So like this is, I mean, FTMO has a lot of cool tools, kind of similar to like the FTMO quick trade manager. There's no other company that allows anything like that, has anything like that, right? Because they don't really care if you pass or you lose. They just want you to keep buying challenges so they make money off your challenge fees. Like MFF does not offer any of these tools, like a mentor application or the quick trade manager. And that's like the main thing, again, why I always revert back to FTMO, because they have a lot of tools available and they actually want you to pass. Versus a lot of these other companies that just bank on you failing. So yeah, Nick said he had to repeat multiple times because I trade very conservatively, so I would end just below the profit goal. Yeah, no, and that's with a lot of people too, Nick. So I think now you should be a lot better because during the live sessions we have like a lot more opportunities. So if you're taking proper risk, you should be able to reach your goal like with no problem within your 30-day trading period. unless it's a really bad month, which typically we don't run into. Question from Alex. Alex is asking, can you go over a momentum scalp like you did last week? Yeah, no problem, Alex. Let me pull that up for you. So I think there was one today, but obviously I didn't trade today, so I don't have any specific. Let me see if I can find on here. All right, so there's one right here, actually. Let me go over here real quick. And I'll just replay it at this point. All right, 720. I'm gonna replay it over here as well. And then 720 over here. All right, Alex. So I'm going to go over an example for the momentum scalping tree, guys. This is one of the strategies that we apply during the live sessions. Typically, when I'm trading during the live session, guys, I'm applying only 3 strategies. So I'm applying the momentum scalp failure, momentum scalp variation, and momentum scalp. Typically, these entries come on back. They appear like back to back. So like typically you'll have a momentum scalp failure, and then it'll be followed by momentum scalp variation, and then it'll be followed by regular momentum scalp. So for example, right here, this red candle right here would be a momentum scalp failure entry. So just confirming the overall trend. Over here is bullish, bullish, bullish. So that's the first requirement there, confirm the overall trend. Everything's bullish on the 1 minute, 5 minute, and 10 minute time frames. You're looking for a retracement momentum signal, which should be right here. Confirm volume is below average. So this right here, volume is below average, below the blue line. So for this here, you would take a long position there, and then you go for about 100 pips. So this trade would technically still be running, right? This is a momentum scalp failure. And then this green buy signal right here would be considered both a momentum scalp variation and a momentum scalp. So typically this will come up before the momentum scalp, but sometimes they come up on the same exact candle. So again, here you're looking for everything to line up, right? We have this trade over here that's currently running prior. And I'm just going to take this off. Momentum scalp failure running right there. Momentum scalp variation right here. I'm not going to go over these requirements because this is not what Alex is asking for. He's asking for the momentum scalp. So we're just going to skip over this one and we're going to move on to the momentum scalp. So for this entry right here, first you want to confirm the overall trend. Again, we'll look back at the 1 minute. You can see price here is bullish because price is above the pivots. Pivots are angling up and the trend meter down below is not green. However, everything else here on the 5 and 10 are bullish. So this isn't necessarily the best example because this was on a holiday. Today's, Monday, January 16th. Holiday today, volatility is very low. So I'll just show you this example here, Alex. And then after this, I'll show you a better example that happened last week because you're not going to find good examples today due to the volatility being super low. But anyways, confirm overall trend. Here is somewhat bullish. It's not very strong, but it is somewhat bullish. However, the higher time frames, 5 minute and 10 minute here are very bullish. That's why I'd be okay with taking this if it was an actual entry that I saw during, my live trading session. So right here on the 5, you can see price is above the pivots. Trend meter is green. Pivots are angling up. Same with the 10 minute over here. You're looking for price to be above the pivots. Pivots angling up and trend meter green. So overall, the bias is still bullish, even though the 1 minute here is not very strong. Once you confirm the trend, next you want to confirm momentum on basically all the time frames. So going back to the 10 minute over here, you want to look back to the most recent momentum signal, which should be this buy signal right here, right? There's no sell signal that came after it. So right here, momentum is bullish. This is going to indicate that price is likely to continue pushing up. Same with the 5 minute over here. If you look at this candle here, you can see that this candle has also a green buy signal. So we have bullish momentum here, and then now for your entry on the 1 minute, you're looking for a bullish momentum, and this is going to be your catalyst for entry. So basically everything's bullish. This 1 minute over here fits your criteria. Everything lines up. Bullish trend, bullish momentum. This is your catalyst for entry. You enter a long position right there. Depending on the movement, I mentioned that you'll set your TP stop loss to 250 to 500, but I adjusted the requirements here on the, because it's going to be based on market movement, right? You're never going to really know if it's like for sure going to be 100 or 250. But for this here, and let me show you how you can determine. So for example, right here, see how this setup right here, for 1030 looks okay, right? Your stop loss isn't super far off. If you go over to 500, then it's super far off, right? Because you're probably not going to reach this point here. Market hasn't moved enough for you to reach your full TP for 250. So instead of using the bigger TP stop loss, you use a smaller one, 1030. Once you have that setup right there, you let the trade run. And you can see eventually it does hit TP right there. So there goes an example of a momentum scalp, Alex. Let me show you another example over here if I can find a better one. It's just the market wasn't moving fast today because it was a holiday. US market was technically closed. So you're not going to see any good entries. You're not going to see any good entries for today. But let me go back to Friday. All right, so Friday was right here. Let's see, Friday, 723. Friday, 723. Open that right there. Let's go over here on the 10-minute as well. Friday at 10:23. I think this is the entry that we actually took, right? Let me see. Yeah, so on that Friday right here, we took this entry right here, but this wasn't for a momentum scalp. It was for a momentum scalp failure. So I didn't catch this one here, but I did catch the one that happened before it. Yeah, it was around the same time. So Friday, about 7 o'clock. All right, so let me just go over another example right here, Alex, and this will be a better example because the volatility here is a lot higher. So first, let me put the requirements up here again for the momentum scalp. First, you want to confirm the overall trend on the 1 minute, 5 minute, and 10-minute time frames. Right here on the 1 minute, you can see price is above the pivots. Pivots are angling up, trend meter is green. So this is a clean entry right here. Like this is a clean confirmation of bullish trend and bullish momentum, right? This is obviously bullish with regard to trend. It's also bullish with momentum because we have a buy signal. Going over to the 5 over here, you're looking for the same thing. Price again here is above the pivots, trend meter is green, pivots are angling up, and you have a buy signal right here, right? So the bias here on the 5 minute is also bullish. Bullish momentum, bullish trend. Lastly, here on the 10-minute, you want to look for the same exact thing. Price again above the pivots, trend meter green, pivots angling up, and again, you have a buy signal right here. So across the 1 minute, 5 minute, and 10-minute time frames, everything's bullish with regard to trend, and then everything's also bullish with regard to momentum. So with that said, you move on to the 4th step because you already confirmed step 1, overall trend, momentum on the 10, momentum on the 5, momentum on the 1. This is your catalyst for entry. Once you have this setup right here, you enter a long position right there. And as I mentioned before, if you want to use a 10-30 split, you can see that here, now it's too tight, right? Because this candle is like way too big. So for this entry right here, this would be way too tight and I wouldn't use a 10-30 split. I would use a I thought I changed this. 1 second, guys. Let me just save this. So. All right, so you can use either a 100 to 300 split or a 250 to 500 split. You can see here that the 100 to 300 is like way too tight. If price was to retrace back, at least the candle size, you get stopped out before it hits your TP, right? So I'm not going to use a tight stop loss for this move. I'm going to make it a little wider, use a 25.50 instead. You got that set up right there. There goes your entry for momentum scalp. You let the trade run, and there you go, full TP. So super simple strategy. But again, as I mentioned, these entries typically come, right after each other. So you'll generally have a momentum scalp failure before. And this is actually a better example to show you all 3 entries. So let me just show you again right here. I'll go over each example here so that you guys can see everything. And you'll see how these entries typically come up right after each other. The entry that we took was actually the one right before it right here, the momentum scalp failure. So question from Alex, he's asking, so larger because it can match the size of my bullish. You would use a larger size to accommodate the market volatility. So the volatility here is high. And, if each candle here is moving at least, so if you just measure the candles here, Alex, if your stop loss was 300 pips, each candle here is above 300 pips, right? So if price was to retrace down even a little bit, it could stop you out. So you're basically measuring the range here. The range here is at least 300 pips. So if price was to retrace back even a little bit, it would stop you up because your stop loss would be right there. Does that make sense, Alex? So depending on how the market's moving, if the market's moving fast, then you got to use a bigger TP stop loss. Typically, I think the 2550 is better anyways because you have a better split. It's a 2-to-1 risk reward versus the 3-to-1 that we typically use. But again, it just depends on how the market's moving. If the market's moving slow, so for example, over here, Alex, if you're trading down here, you look at the range. The range here is like 200 pips, right? This is okay to use a smaller TP stop loss because you're not going to get very much movement. But you compare this to how this is moving up here. This is like way too wide, right? It's about 400 pips or even 500. So yeah, it's going to come with time. Like you're not going to pick this up right away. For me, I trade live every day and I look for the same things every day. So like I can just eyeball the chart. I'm like, okay, volatility is low right here, right? So I'm gonna use a small TP stop loss. I'm like, okay, volatility is high right here. So I'm gonna use a bigger TP stop loss. But over time, it'll just become second nature to you. You don't really have to think about it too much. But again, here's the 3 strategies that we apply during the live session. Here's an example of where you get 3 entries that follow back to back. So this red candle over here is going to be a momentum scalp failure entry. Again, everything here is bullish. So bullish on the 10, bullish on the 5, bullish here on the 1. Next, you want to confirm retracement momentum signal. You have retracement momentum signal right here. Confirm volume is below average. This red volume bar is below the blue line, so it's below average. In this case right here, I would enter a long position right there for a 25-50 split. That's going to be entry number 1, momentum scalp failure. The next thing that you're looking for is a green candle to close above the pivots. So for the momentum scalp failure, momentum scalp variation, confirm overall trend. We already confirm it's bullish. Confirm momentum aligns on the 5 and 10. Looking over here on the 5 and 10, we have a bullish momentum here, right? That's going to be step 2. Step 3, confirm retracement momentum signal on the 1 minute. There goes a retracement momentum signal. Step 4, confirm price closes past the pivots in retracement on the 1 minute. You can see that price was above the pivots here, and then it closed below it right here on this candle, right? For step 5, you want to confirm that price closes back above the pivots in correction of trend. So with that said, this next candle right here is going to be the momentum scalp variation entry. So we have 2 entries currently running at this moment. Now we got 2 right here running, which is the momentum scalp failure and then momentum scalp variation. And you can see that these typically come in order. So we got both trades right here running. Still hasn't hit TP yet. Now it hits TP. So this candle right here hits TP for both momentum scalp failure. So that's a 250 pip bagged right there off the first entry. And then for the momentum scalp variation over here, another 250 pips right there. So in total, you'd be up 500 pips at this point. Now you have a third entry right here, which is the momentum scalp. Once that plays out right there, pushes through and blasts right through TP. So you got 3 back-to-back entries right here, and these come in order: first, second, and third. Question from Alex. Alex is, yeah, I just answered your question there. Alex is just basically asking if they come in a certain order. Yes, they do. So it's usually a momentum scalp failure, momentum scalp variation, then momentum scalp. So like, say, for example, you're not confident about the entries yet, right? If you see a momentum scalp failure right here, you don't have to hop into that one. You can wait for the next one. So if this one right here, you missed, then okay, fine. You hop into the variation. If you miss that one too, then okay, fine. You hop into the momentum scalp. Typically, these will come back to back. So you have 3 different opportunities to make entry. So momentum scalp failure will probably be the most risky because it's the first one. Momentum scalp variation would probably be like the middle one. This is probably the best one to enter on. And then if you're like really late and you miss both entries, then the momentum scalp here would be the very last one. And then it'll just reset. And if you have another entry here, let me see if there's another one that comes up. Okay, so there's another one right here, right? Momentum scalp failure. That's one entry. Now you're waiting for the price to close above the pivots. Right, so momentum scalp failure hit full TP right there. You're still waiting for the candle to close above the pivots. All right, this candle right here closed above the pivots. It's kind of hard to see. I don't know if it actually closed above it, but I'm going to assume that it did. Full TP right there. So again, two TPs right after each other, right? Momentum scalp failure. You missed that one. Okay, fine. Take the momentum scalp variation right here. That one hit again. Okay, fine. What's next? Where's the momentum scalp? Okay, there's momentum scalp right here. The problem with this entry here is I can't remember if this was on Friday. So I don't think I'd be trading this late into the session, but this technically would be a momentum scalp. Obviously I didn't take a trade, but let's see if it hits. So this one doesn't hit. Generally, I don't trade this late into the session, especially on a Friday. Once it gets close to 8 o'clock, I'm usually done if you're on the live sessions. And this is why you typically don't want to trade around this time because price will start to consolidate and go sideways. Let me check the calendar real quick. This was on 13th. I think we were done trading at that time. Yeah, so there's just news at 7 o'clock. But this entry right here came up at that time right there. So this one right here wouldn't have hit, but it was already late in the session. So I don't think we would have even looked to take an entry. This was at 7:47. Let me check the other time frames. 7:47. Now everything here still aligned for the most part. I just can't remember if there was like news price or something that happened around that time. Yeah, I mean, either way, it was too late on a Friday. Generally, I just go for like 1 or 2 trades on Friday. I'm usually done. So like these earlier entries here are perfectly fine. 7 o'clock, 7 o'clock, 7:30, 7:40, and this one was like super late. It was at 7:48. So really close to 8 o'clock. My cutoff from trading is 8 o'clock over here. So say, for example, I was in this trade and I was thinking about, okay, like I want to get out before 8 o'clock. I would have exited for a loss right here for a small loss. That's usually where I'd take my trade and I'd be done for the day. I can't remember if there was news around this time or anything like that. I know there's news at 7, but news price would have been like way down here. Oh, I think there was a sessions up there. Yeah, okay, so actually this wouldn't have been a trade. I knew there was something wrong with this trade here because I remember we looked at it and it was not one that we would take. So if you guys remember the red flags, so I would have taken these 3 right here, would have taken this one. I would have skipped this one because it was right at the red flag. This one I for sure would have skipped because it was literally on the red flag. So that the only losing trade here, as long as you follow the strategy properly and you avoid red flags, you would have been perfectly fine because you would have won every other trade and you would have avoided the only loss here, which would have been this one. Red flags went to avoid trades when prices near sessions. This purple line here is a session. This red line here is a session. This purple line here is also a session. You can see the tags over here on the right hand side. This here is the Asia high. So this is the Asia high price from Asia session the day before. This is the London high. And then this is the Asia low. So this trade right here definitely would have been avoided. This one would have been avoided too, even though it would have hit TP. But this one right here would have been perfectly fine. This is the one that we actually took. So if you guys remember my trade right here on Friday, that's the trade that we took right there, full TP, momentum scalp failure. I locked in about 1,190 off my FTMO main account, 1690 off my copier, 1190 off my MFF number 1, 1190 off my MFF number 2, 1240 on my MFF number 3, and then 1,000 off my TFF. So I think that was it. And I probably hopped into like one other trade here because I had about 2,000. Yeah. So, I mean, that's pretty much the only trade that we took on that day because I missed every other trade. Like these trades came up right here, but I totally missed them, which is all good. I mean, it happens. There's always going to be days like that where I'm kind of, where I'm not paying attention and then I miss the actual trade. Yes. So Alex is asking, can you go over how to apply the lines for sessions? It's an indicator, Alex. So like when you want to turn on the sessions, you just got to go to your indicators, invite only scripts, and then it's going to be called sessions high low, K2 sessions high low. Click on that right there. And then this is what it'll look like. It'll like color in your chart. So in order to change that, just go to your settings. So this is what it looks like. It just, what happens here is it colors it by session. So if it's purple, this means it's Asia session. When it's red, this means it's London session. London overlaps with US sessions. You can see right here, it's green because it overlaps. So once London session's over at 8, it starts to change into a deeper green. So if you want to just open that, just pull it up on your indicators, go to your settings, turn off background, if you want to take off the background, it's not really necessary. And then, yeah, just click OK. Oh, gotcha. Okay. Yeah. So Alex is asking, can you go over how to apply lines for news? Yeah, no problem. So let me go and close this real quick. So the way that I typically apply or draw my news price, guys, is I will. All right. So just let's go to news from Friday, right? So on Friday over here, we had news at 5:30, right? So we had news at 5:30 a.m. my time, Pacific. I go over here to the 5:30 candle. Okay, so let's just go and act like we're just starting to trade for the day on Friday. So this is pre-market right here. I know that there's news on this candle right here, right? 5:30. So this is the 5:30 candle. When you get a red candle like this, Alex, this means that price starts from this top part, right? If you have a green candle, let me just go, I'll go back to that 5:30 candle right here. Okay, so whenever this candle opens at 5:30, because this was news, right? If it's a red candle, the top of the body is going to be where the candle opens from. So this is before news. Vice versa, if you're looking and you have a green candle here, the bottom of the body, not the wick, but the body, just the body right there, that's where the candle opened. So you can see price push down right here. It reopened right here, pushed up, reopened right here, pushed up, reopened right here, pushed down. And this is going to be the open and close of the candle. So for a green candle, the lower body is going to be opening price, that point right there. And the closing price of the candle is going to be the top part right there, just the body, not the wick. So for this candle right here at 5:30, news happened at 5:30. And basically what you're looking to identify is to see how the price reacted to the news, right? So what you want to do is you want to open up your horizontal line tool. I use the magnet tool here to get exact price. You go on top of this body right here, click the button. I typically use a pink line, and that's how I draw news. If you want to go and label it, you can label it too. Go to text, put 5:30 US news. And that's how I identify news right there. And then vice versa, if I'm looking for the other news event here at 7 o'clock, same thing again over here. As we get close to 7 o'clock. So this right here is a 7 o'clock candle, right? Candle open right there. I do the same thing, click on the horizontal line tool. I use the magnet tool to pretty much latch on to opening price. Go to the bottom of the candle, click right there. And there goes my news price for 7 o'clock. If you want to label it, you can. Typically, I don't label it because it's just a waste of time sometimes if I'm trying to move quickly. But if you want to label it, it doesn't take that long. So, and there you go. You have a label right there. 7 o'clock US news, 5:30 US news, and then the sessions right here. So this is how you would identify where your red flags are. Not too difficult. Now at this point, you're like, okay, I'm going to avoid trades whenever price gets near this point or whenever price gets near this point. And it pretty much takes out your guesswork right there. So pretty straightforward. Let's see. So Alex said, when you say you don't want to trade close to news, how close are you talking? So for example here, let me see if I can find the main thing that you're looking for is that you don't have to touch news to reach your target, right? So say, for example, so I think there was an entry right here, right? Like, okay, so say, for example, you're entering a buy position right here, right? So see, say for example, you have a momentum scalp right there, right? And you want to enter a buy position right here. And say, for example, you're going to use a 1-to-1. So you want to go from like 46 to 46. Right? If you're to take this trade right here, you have to pass the sessions, right? There's no way you're going to reach your profit target unless you reach the sessions right here, right? So that's too close because you have to touch it to get to your TP. So if that's the case and that's too close, I'm for sure not going to take this trade here. If you're going for a tighter TP stop loss, like say, for example, you're going for a 25 to 50. This is pretty close, but if you really want to take the trade, I would just make sure to close before it reaches that point, right? So like price pushes up right there. If I was taking this trade right here, once price got to that point, I wouldn't get greedy because this is the area of manipulation. So at this point, I'm like, okay, I'm just going to close out with profit because I don't want to risk this thing just like getting close to my TP and then going full on reversal on me, right? So it's just looking for, and you can see right there, it hits TP, but look where it bounces off. So it hits the TP, but it bounces directly off that red line, right? So you're basically taking a gamble at that point. Because yeah, of course you could probably hit, it'd probably hit your TP, but it could have got really close to it, barely touched it, not trigger your TP, and then come straight down. And I'm not looking to gamble like that, right? I'm only taking trades when I'm absolutely sure it's going to hit. And that's why I have such a high win percentage, because I avoid these risky trades. And there you go. See, price gets around this area here. And then at this point, you know, price can go either way. So price gets to that point right there, has trouble getting past it, and then it comes back down. Now, if you were to play around with this and just see when price gets near these sessions, you can see this whole area right here, right? If you were in a trade right here, like you'd be so stressed out if you're like looking at this going back and forth between these sessions. So like in this situation, I just wouldn't have taken a trade there. As you can see, whenever price gets near the sessions right here, this is where price starts to get a little wacky. So it doesn't necessarily move directional, it keeps going back and forth. And you can see right there, it just keeps bouncing directly off it. Yeah, exactly. Alex said emotions would be wild seeing all that movement. Yeah, so that's why I just avoid the trades whenever it gets near it. Yeah, and it's just so this is not to say that you can't take trades when price is near these areas. It's just you're really taking a gamble when you're trading around those points, because you'll see a lot of entries here that still do hit a lot of times. It's just I'm not looking to take that gamble, right? Whenever I take a trade or whenever I call a trade on the live session, I'm like 100% sure it's going to hit. If it doesn't hit, then I'm like, all right, the market just didn't work in my favor. But whenever I take a trade, you know, I enter every trade with confidence like no other, right? Like if I lose a trade, I'm like, all right, whatever, it just wasn't working. But when I enter that trade, I'm already expected to win. So, you know, that's how you can build your confidence up. Just focus on the quality entries. And realistically, if you could focus on just one quality entry a day, you know, your account can grow really quickly. It's just, you know, compounding from there. Yeah, no problem, Maria. We'll see you tomorrow. But all right, guys, if there's any other questions, you know, feel free to put your questions in the chat, guys. You know, I'm willing to stay on here for as long as we need to. But if there's no other questions, then I guess we'll be wrapping this up. We've been on the session for about an hour and a half, so might be time for a break. But if you guys have any other questions, go ahead and drop them in the chat. I'll answer whatever you guys need help with. Otherwise, we will be back here tomorrow for the next live session as we officially kick off this trading week. Let me check the news for this week. I think this is Fed week. So we're going to get a lot of Fed talks throughout the week. So tomorrow, all right, no news. Okay, we have pre-market news here. High impact at 5:30, Empire State Manufacturing Index. So this will probably push price a little bit, which should be a good thing because we need that volatility. Then we have Fed member Williams speaking at noon. Wednesday, we have CPI, or sorry, PPI, another set of inflation news that are going to be coming out pre-market. Then we have some news at 6:15, CB leading index at 6:30, business inventories at 7. A lot of news on Wednesday. So Wednesday is the big day. It's Fed day. There's going to be a member of the Fed speaking pretty much throughout the day. Yeah, we have Fed member Harker speaking, Fed member Logan speaking. They're going to cover like the inflation news. And then Thursday, we have some more Fed members speaking, Fed member Brainerd, unemployment claims, Philly manufacturing index, a lot of news pretty much all week, which I mean, could be a good thing or it could be a bad thing. We'll take the market as it comes. I probably won't be taking the breakout though, because we have a lot of high impact news pre-market. So probably no breakouts for this. See, no breakout on Tuesday because that's pre-market. No breakout on Wednesday, that's pre-market. No breakout on Thursday, it's pre-market. So it does not look like we're going to have any official breakouts this week, because one of the rules for the breakout is to avoid entries on pre-market high impact news days, which is every day this week. So probably no breakout this week, but we will be taking scalps as long as the requirements are met. So I think the news here will help. It'll be pretty interesting. But yeah, I think that's it for today, guys. So if you guys have any questions, feel free to email me. You guys can email me at sean@kodikaitrades.com. Otherwise, you guys are always welcome to message me on Telegram. It's probably the fastest way to get in touch with me. And I think that's about it. So, all right, guys, unless you guys have any other questions, I'll see you guys back here tomorrow for the next live session. We'll officially be kicking off the trading week, but we will have to be a bit careful with trading because let me just check real quick. Let me see what everything's looking like. It's looking bullish, but I don't know how it's going to look like tomorrow, especially with a lot of the inflation news coming out. Inflation news, unemployment claims, and then the Fed speaking as well. Hopefully the Fed has good things to say, but I mean, other than that, that's about it. So, all right, guys, I'm going to wrap this up. If you guys have any questions, feel free to reach out. Otherwise, I'll see you guys here tomorrow for the live session.